Title: Smart Money by Scott Lopez. English book summary: ABD of Finance. Intro. Hey, I know you are on a journey. You want to grow your money, understand the market, and play the game like the pros. But sometimes it feels like a puzzle, right? So many terms, so many strategies, so many voices. But what if someone could guide you? Not just with facts, but with experience and heart. That's what Scott Lopez does in Smart Money. It's not just a book. It's a mindset, a shift from average thinking to investor thinking. Today, I'll walk you through it, chapter by chapter, like a friend, one who wants to see you win. Chapter 1: The Illusion of Knowledge. We live in the age of information. Everything we want to know is just a tap away. Market news, stock tips, opinions, predictions. It's all out there. And because we consume so much, we start believing we know enough. We think we understand the market. We think we can predict what will happen next. We think we're ready. But that's the illusion. It feels like knowledge, but it's not. It's noise. It's surface level. It's half-truths wrapped in confidence. And that's dangerous. Because when we think we know everything, we stop asking questions. We stop preparing. We stop learning. Scott Lopez opens the book with a warning. He says the greatest danger for any investor is overconfidence built on shaky ground. He's seen it. New traders, they watch a few YouTube videos. They follow a few influencers. They get a few wins. And suddenly, they feel unstoppable. But markets aren't that simple. The pros, the real smart money, they never stop learning. They know the more they learn, the more there is to learn. They don't chase tips. They chase understanding. They don't ask, what should I buy? They ask, why is this happening? That's the shift. Scott talks about something called false confidence bias. It's when we confuse information with mastery. It's when we think knowing a few terms means we've understood the game. But knowledge without application, it's just weight. It slows us down. So how do we escape this illusion? Scott gives us a starting point. 3 steps. Step 1: Admit you don't know everything. It takes courage, but it opens the door to real growth. Step 2: Replace opinions with principles. Don't just follow what someone says. Learn why it works. Build your own beliefs based on logic, not hype. Step 3: Stay curious. Curiosity is your edge. It keeps you sharp. It keeps you humble. Because in the market, the moment you feel certain is the moment you're most vulnerable. Smart money never assumes. It analyzes. It verifies. It prepares. Scott says don't just be a collector of information. Be a student of truth. And that line, it hits hard. Because the world doesn't need more traders with loud opinions. It needs more investors with quiet conviction. So, if you want to begin your journey, begin here. Not with pride, but with humility. Not with noise, but with awareness. Your real power, it begins the moment you say, I'm ready to learn. For real this time. Chapter 2: The Psychology of Smart Money. Let's talk about the real battlefield. It's not the stock chart, not the news, not even the numbers. It's your mind. Most people lose money, not because of the market, but because of themselves, their emotions, their impulses, their stories. Scott Lopez goes deep into this truth. He says if you don't understand your mind, you'll never master your money. Let that sink in, because it's not just about knowing what to do. It's about doing it when it's hardest. Let's be real. When the market crashes, you feel fear. Your stomach twists. Your heart races. You want to sell. You want to escape. And when it rises fast, you feel greed. You want in. You want more. You forget the risk. You forget the plan. That's not strategy. That's survival mode. Scott explains it beautifully. He says we're all wired to protect ourselves. Our brains are trained by evolution. Avoid danger. Chase reward. Stay safe. But the market doesn't reward survival instincts. It rewards calm thinking. Smart money doesn't panic. It doesn't chase. It watches. It waits. It decides. While others are reacting, smart money is observing. That's the edge. Scott talks about 2 dangerous emotions. 1. Fear of missing out, FOMO. 2. Fear of loss. Both feel different, but both lead to bad decisions. FOMO makes you buy high. Fear of loss makes you sell low. And that cycle, it bleeds your capital slowly. So how does smart money stay in control? Scott shares a few tools. Tool number 1, self-awareness. You must learn your emotional patterns. Notice how you feel when you lose. Notice how you feel when you win. Name those feelings. Observe them, because once you see the pattern, you can change it. Tool number 2, pre-commitment. Smart money doesn't decide in the moment. It decides before the moment. It creates rules and follows them no matter what. That's what separates the pro from the gambler. Tool number 3, detachment. You are not your portfolio. You are not your last trade. You are not your mistakes. The market doesn't love you. It doesn't hate you. It just moves. Smart money doesn't take things personally. It moves on, quickly, quietly. Scott even shares this simple but powerful quote. The calmer you are, the clearer you see. And that's everything. Because clarity creates good decisions. Good decisions create good results. And good results, repeated, create wealth. Not noise, not hype, just calm, clear action. So, what's the lesson here? Before you try to beat the market, try to understand yourself. Before you try to outsmart others, learn to quiet your own fear. Because the real game, it's not outside you, it's within you. And once you master your mind, money follows. Slowly, steadily, faithfully. Chapter 3, Seeing What Others Don't. Most people, they look at the surface. They see red and green candles, headlines, hype, fear, and they react. But smart money, it looks beneath. It looks beyond what's obvious, beyond what's noisy, beyond what the crowd is chasing. Scott says something powerful in this chapter. You can't beat the herd if you think like the herd. Think about that. Most investors follow the masses. They do what's trending, what feels comfortable, what feels safe. But by the time something becomes obvious, it's already priced in. It's too late. That's where the edge is lost. Smart money doesn't follow the crowd. It watches the crowd. It studies their fear, their excitement, their patterns. It sees opportunity where others see danger. And it sees danger where others see opportunity. This chapter is all about developing that vision. Scott calls it the third eye of the market. It's not mystical, it's mental. It's the ability to see through noise. To notice what most ignore. Let's break that down. 1. Learn to question everything. When a stock is flying high, ask why. When everyone's buying, ask who's selling. When there's panic, ask what's being hidden. Smart money is skeptical, not scared, just careful. It asks deeper questions. It digs. 2. Look for hidden clues. Scott says the truth is always hiding. In volume, in insider moves, in quiet shifts, while others watch the price. Smart money watches the why behind the price. Sometimes the market moves with no news. And that's your clue. It means something is happening. But not everyone sees it yet. That's your edge. 3. Think in probabilities, not certainties. The average trader wants certainty. Will this stock go up? Is this a sure thing? But smart money thinks in odds. It doesn't chase guarantees. It builds edges. Edges built on logic, on patterns, on preparation. Even with a 60% chance, they take the shot, but they manage the risk. That mindset, it's rare, but it's real power. Scott also teaches about contrarian thinking. Going the other way, not just for the sake of being different, but because sometimes the truth lies in the opposite direction. When everyone's bullish, smart money becomes cautious. When everyone's scared, smart money gets curious. Because crowds aren't always wrong, but they're often late. And finally, Scott shares the ultimate skill: pattern recognition, seeing what others miss, noticing the repetition, the rhythm of fear and greed, the setups, the traps, the quiet footprints left by big players. It's not about magic, it's about awareness, about being present, patient, prepared. So, what's the heart of this chapter? It's this: don't just look, see. Don't just react, read. Don't just follow, think. Train your mind to spot what others ignore. Because your edge is not in speed. It's in depth, that quiet depth, that deeper insight. That's what makes you smart money. Chapter 4, Building the Right Habits. Success in the market is not a one-time move. It's not luck. It's not about catching the perfect trade. It's about habits. Small, boring, disciplined, daily. Scott says it clearly. You don't rise to the level of your goals. You fall to the level of your systems. Think about that. Everyone wants to win. Everyone dreams of profits. But very few build the routines to support those dreams. That's the difference. That's what separates noise from mastery. Smart money isn't just smart by knowledge. It's smart by routine. It builds strong habits, brick by brick, day after day. And those habits, they protect your money. They protect your mind. They build your edge. Let's look at the ones Scott teaches. 1. The habit of preparation. Smart money never jumps in blindly. They prepare. They research. They write things down. Before the market opens, they already know their targets, their exits, their risk. They don't wing it. They plan it. Because planning removes emotion. And emotion is the enemy of execution. 2. The habit of journaling. Scott is big on this. Every trade, every thought, every mistake, every win. Write it down. Why? Because memory fades. But journals speak the truth. You begin to see patterns. Where you fail, where you shine, where you lie to yourself. And once you see clearly, you grow faster. 3. The habit of reflection. Most traders move too fast. Win or lose, they just move on. But smart money, they pause, they reflect, they ask, what did I do well? What went wrong? What can I learn? This habit makes you dangerous. Because you're not repeating mistakes. You are upgrading constantly. 4. The habit of risk management. This one is non-negotiable. Scott says survival is success. That means protecting your capital. Always. Smart money never risks it all. It cuts losses fast. It sizes positions wisely. It never trades emotionally. It plays the long game, not the ego game. Because staying in the game matters more than winning one round. 5. The habit of patience. This is where most people fail. They want action, every day, every hour. But smart money waits. It waits for the setup. It waits for the confirmation. It waits for the right moment. Because doing nothing is also a strategy. Scott also talks about something deeper. He calls it habit stacking with identity. It means you don't just build habits. You build a new identity around them. You tell yourself, I am a disciplined investor. I am someone who respects risk. I am patient, prepared, and present. Because once your identity changes, your actions change, and then your results follow. Here's the core truth. Habits greater than hustle. You don't need more effort. You need more alignment, more consistency, more structure. Smart money isn't chaotic. It's calm, clear, and built on strong foundations. So today, ask yourself, what habits are serving me? What habits are hurting me? And what habits do I need to become the person I want to be? Because the market won't change for you. But you can change for the market. Start small. Start today. And remember, it's not the big wins that make you wealthy. It's the small habits repeated quietly that build a fortune. Chapter 5. Risk is not the enemy. Most people fear risk. They run from it, avoid it, hide from it. They want safety, certainty, security. But here's the truth Scott shares. Risk isn't your enemy. It's your greatest teacher. Let that sit with you. Because every reward you seek, every breakthrough you want, lies on the other side of risk. The problem isn't risk itself. The problem is not understanding it, not preparing for it, not respecting it. Scott says that average investors fear risk because they confuse it with danger. But smart money embraces risk, not blindly, but bravely and wisely. They study it, they plan for it, they partner with it. Let's break this down. 1. Understand what risk really is. Risk isn't about losing. It's about exposure, about uncertainty, about possibility. And with possibility comes power. Every decision carries risk, but every risk carries opportunity. The question is it calculated or careless? 2. Define your risk before you act. Most people figure out risk after they're already in trouble. Smart money defines risk first. How much am I willing to lose? What happens if I am wrong? What's my plan when it goes against me? If you can't answer those, you're not ready. Risk isn't something you deal with later. It's something you prepare for before. 3. Risk is personal. Your risk isn't my risk. And mine isn't yours. Smart money knows this. They don't copy others. They don't compare. They trade based on their goals, their capital, their emotions, Because the biggest risk is trading someone else's game. 4. Manage, don't avoid. Here's the truth. You can't avoid risk. You can't eliminate it. But you can manage it. Minimize it. Work with it. Use stop losses. Use position sizing. Use rules. Smart money doesn't fear risk. Because they know they're in control. 5. Risk is where growth lives. Scott shares something beautiful here. He says, every time you face risk, you grow. You learn. You adjust. You sharpen your mind. You don't become smart money by staying safe. You become smart money by walking into risk with awareness, with presence, with protection, with purpose. And this might be the most important part. Emotional risk. Because it's not just about losing money. It's about what that loss means to you. Does it shake your confidence? Does it trigger old wounds? Does it make you doubt yourself? That's the inner risk. The silent one. The invisible one. Smart money faces this too. But they don't run. They sit with it. They learn from it. They grow through it. So, what's the truth of this chapter? Risk is not a monster. It's a mirror. It shows you who you are, where you're weak, and where you're strong. It's not here to destroy you. It's here to shape you. So next time risk shows up, don't hide. Look it in the eye. Ask it what it's trying to teach you. And then walk forward, not with fear, but with wisdom. Because in the hands of the prepared, risk becomes a weapon. And that weapon can build your freedom. Chapter 6. The Power of Information Asymmetry. There's something the smart money knows. Something that gives them an edge. A quiet advantage. A hidden upper hand. It's called information asymmetry. Sounds complicated. It's simple. It means they know something that you don't. Think about it. Big players, institutions, funds. They're not just trading like everyone else. They have teams. They have tools. They have data you've never seen. They know when the CEO is about to resign. They know when a company is buying back shares. They hear whispers long before you see headlines. And that's the game. Scott says something powerful here. You're not playing against amateurs. You are playing against giants. But don't let that scare you. Let it wake you up. Because you don't have to beat them. You just have to stop thinking like the crowd. The average trader, they chase news. They follow noise. They act late. By the time something is trending, it's already been traded. Smart money moves before the story breaks. Because they're not reacting to the news. They're anticipating it. Scott gives us a few real truths. 1. Public information is not enough. If you read it on a blog, or hear it on YouTube, you are already behind. Because that info, it's old, it's been acted on, and the smart money, they've already entered, or excited. You are catching the leftovers. 2. You need better filters. You can't control what they know, but you can control what you focus on. Smart money doesn't follow every headline. They focus on what matters. Earnings, volume shifts, unusual options activity, insider trades, Form 4 filings. They dig deeper. They follow the trail. They read between the lines. Because sometimes, the truth hides in silence. 3. Tools matter. Scott isn't saying you need $1 million terminal. But he is saying, level up your tools. Use platforms that show insider transactions. Check real-time institutional activity. Track where the money is flowing. Not just where the talk is going. The tools you use shape the information you trust. 4. Stay curious, stay ahead. The best investors, they're detectives. They investigate. They ask questions. They don't settle for surface-level answers. They wonder, why is the stock quietly rising? Why is volume spiking with no news? Why are insiders loading up? That curiosity, that hunger, that's the beginning of real insight. And here's the big truth. You don't need all the information. You just need the right clues. Because once you start thinking like smart money, you begin to notice things others don't. You don't need to be first. You just need to be early and accurate. Scott wraps this chapter with a gentle reminder. Information is power, but only if you know how to use it. Don't drown in data. Don't chase every voice. Choose your sources. Refine your lens. Sharpen your instinct. And never stop learning. Because the market is full of signals. But only the wise will hear them. Chapter 7. Time, the ultimate advantage. In this fast world, we want everything now. fast money, quick wins, instant success. But the market doesn't work that way. Not for the smart money. Scott says something timeless. Your biggest advantage is time. Most traders, they're in a rush. They chase every spike. They panic on every dip. They live minute to minute. But smart money, they think in months, in years, because they know something the crowd forgets. Wealth doesn't come from speed. It comes from patience. Let's get real. Time is not just a clock. Time is a filter. It filters out hype. It filters out noise. It reveals truth. A bad company can fake it for a quarter. A stock can pump for a week. But over time, only real value remains. Scott breaks this down beautifully. 1. Compounding needs time. Everyone talks about compounding, but very few wait long enough to see it work. The first few years, it's slow, it's boring, but then, it takes off. That's the magic of time. It rewards the ones who stay. 2. Time reduces risk. Short-term trades, they carry emotion, volatility, randomness, but long-term views, they ride out the noise. They allow logic to win. They give you strategy room to breathe. Time is not your enemy. It's your shield. 3. The crowd is impatient. That's your edge. While they panic sell, you sit still. While they chase news, you build conviction. Because over time, trends shift, sentiment fades, but your focus remains. 4. Time builds character. Waiting is hard. It tests you. It humbles you. It teaches you to trust the process. That's not just a trading lesson. That's a life lesson. Scott says, if you can stay still in chaos, you win. Not just in the market, but in your mind. 5. Time aligns with value. Real businesses, they grow over time. They solve problems. They evolve. Smart money invests in value that grows slowly. They're not chasing the next hype. They're holding the next treasure. Because time doesn't lie. And here's the most beautiful truth in this chapter. Time gives you second chances. You don't have to get it perfect today. You don't have to know everything now. You just have to stay, learn, adjust, try again. Because the longer you stay in the game, the better you play it. Scott shares one of his core principles. I don't need to be fast. I just need to be faithful. And that hits deep. Because while the world rushes, you can choose to breathe, to zoom out, to trust your preparation, to ride the waves, not fight them. So, what's the soul of this chapter? It's this. Time is your silent partner. It doesn't shout. It doesn't rush. But if you respect it, if you walk with it, it will reward you more than you can imagine. Not just with money, but with wisdom, with peace, with perspective. Because the longer you stay, the clearer you see. Chapter 8, The Game of Liquidity. This chapter, it changes how you see the market. Because it reveals the invisible game that's being played behind the scenes. A game you were never told about. A game called liquidity. Let's start with the truth. Smart money doesn't just react to price. They create it. They don't chase liquidity. They hunt it. But what is liquidity? It's money waiting to be taken. It's the buy orders, the sell orders, the stop losses, the limit entries, the emotional exits. Liquidity is the blood in the market. And smart money, they are the hunters of that blood. Scott Lopez opens our eyes. Retail traders look at candles. Institutions look at liquidity. Retail sees a breakout. Institutions see stop-loss clusters. Retail sees a support level. Institutions see a trap. Every time you place a stop-loss, that's liquidity for someone else. Every time you panic and exit, that's a gift to a bigger player. Here's the twisted reality. Before smart money buys, they need someone to sell. Before smart money sells, they need someone to buy. That someone is usually you. Scott shows how price is manipulated to find liquidity. Not in an evil way, but in a calculated, professional way. They push price above resistance to trigger breakout traders. Then dump into that liquidity. They deep price below support to trigger panic sellers. Then buy into that fear. These are called liquidity grabs. Also known as stop hunts, fake outs, sweep zones, whatever you call them, they are traps. And if you don't know this game, you become bait. Here's how Scott breaks it down for us. 1. Understand where liquidity lives. Look at swing highs and lows. Look at consolidation zones. Look at obvious support and resistance. Those are liquidity pools. That's where smart money goes fishing. 2. Stop thinking like the crowd. If something looks too obvious, it probably is. The more eyes on a level, the more likely it will be manipulated. Don't follow the herd. Study where they'll go and get there first. 3. Watch for the trap, not the break. A breakout isn't a signal. The reversal after the breakout is. That's where smart money enters. Not at the hype, but at the trap. 4. Trade the reaction, not the prediction. Don't try to guess what will happen. Watch what actually happens after the liquidity is taken. Does price reverse sharply? Did volume spike and then drop? That's a clue. Smart money may have just filled their orders. 5. Use liquidity zones to your advantage. Instead of placing your stop where everyone else does, place it beyond the trap. Enter after the sweep when retail has already been shaken out. You're not reacting. You are flowing with the giants. Scott gives us this deep insight. Smart money needs dumb money to act first. They build traps, not trends. So if you keep getting stopped out, if you keep entering late, if you always feel like you are on the wrong side, you're probably being used for liquidity. But here's the beautiful thing. Once you see it, you can flip the game. You become the observer, the sniper, the shark, not the bait. So what's the core lesson of this chapter? Learn to see liquidity, not price, not candles, not news, but the real motivation behind every move. Because the market doesn't move without purpose. It moves to fill orders. Big orders, smart money orders. And if you can track those, you're no longer retail. You are in the shadows, where the real game is played. Chapter 9, Strategy and Execution in more detail. Every good idea is just an idea, until it is executed. This chapter is where planning meets reality, where thinking ends and doing begins. Scott Lopez shows us that smart money doesn't just analyze. It acts. And when it acts with precision. Let's begin. Smart money always works with a clear strategy. Not just a plan to buy low and sell high, but a complete roadmap. It defines where to enter, where to exit, and how much to risk. There is no place for guessing. There is no room for hope. Hope is not a strategy. Discipline is. Execution is not about speed. It's about timing. Smart money doesn't chase prices. It waits. It stalks the market like a lion. Quiet, still, focused. Then suddenly, it strikes. Without hesitation. Most retail traders execute emotionally. They enter late. They exit early. They panic on drawdowns. Smart money does the opposite. It lets the market come to it. Not the other way around. Position sizing is crucial. Never bet big just because you feel confident. Smart money sizes their trades mathematically. They protect capital above all. Because once capital is lost, the game is over. Execution also means following the rules. Even when the market tempts you. Even when everyone is shouting. Even when fear is high and greed is louder. Smart money stays silent and follows the system. Because emotion kills execution. Scott says, you can have the best analysis in the world. But if you cannot execute with discipline, you still lose money. That's the hard truth. Smart execution also includes adaptability. Markets change. News breaks. Liquidity dries. Smart money adjusts. It does not cling to a broken plan. But it never abandons its edge. Risk management is a part of every execution. Every trade has a stop. Every position has a plan. Smart money doesn't take losses personally. It takes them professionally. Losses are business expenses, not emotional wounds. The final piece. Reviewing every execution. After the trade is over, smart money asks, did I follow my rules? Was my timing right? How can I improve? That's how they grow, not just in profits, but in maturity. In short, Chapter 9 teaches us this. Strategy without execution is like a map without legs. And execution without discipline is like driving blind. Only when both come together can you truly walk the path of smart money. Chapter 10, Becoming Smart Money. This is the final chapter. And it's not just about the market anymore. It's about you, about who you are becoming, and what you need to leave behind. Because becoming smart money is not just about learning strategies. It's about building a new identity. Let's go deep. Smart money is a mindset. You don't become smart money just by copying trades. You become it by thinking like it. That means, stop chasing, Start waiting. Stop reacting. Start planning. Stop fearing. Start accepting risk. It begins with you. Scott Lopez makes it clear. This journey isn't about predicting the market. It's about mastering yourself, your emotions, your habits, your beliefs about money, and your response to loss. Because the market will test every part of you, every weakness, every fear, every ounce of ego, from amateur to professional. Retail traders ask, will this trade work? Smart money asks, does this trade fit my edge? Retail traders look for excitement. Smart money looks for consistency. Retail traders jump from one system to another. Smart money masters one process and repeats it with precision. Build discipline like a muscle. You won't become smart money in 1 week. It takes time, practice, failure, reflection. You will fall. You will get emotional. You will take bad trades. But if you learn from every mistake, you will rise. Stronger, sharper, smarter. Master the feedback loop. Smart money traders review every action. They keep journals. They track trades. They analyze their own behavior more than the market. Because the real battlefield is inside your head. If you can win there, you can win anywhere. Burn the old identity. To become smart money, you must let go of the gambler, the overtrader, the "I'll double my account this week" dreamer, and become the patient strategist, the disciplined executor, the humble learner. It's a lifelong practice. Becoming smart money is not a destination. It's a daily practice. You never stop learning. You never stop evolving. You never stop protecting your edge. Because the moment you get arrogant, the market will humble you. Fast. Your final takeaway. You don't need to be perfect. You just need to be intentional. Every trade you take, every dollar you risk, every emotion you feel, make it part of the process. A process that's built on clarity, discipline, risk control, and relentless self-awareness. You are not just a trader anymore. You are becoming smart money. And smart money always plays the long game. Outro. So, now you've walked through the mind of smart money. You've seen its patience, its power, its silence. This wasn't just a book. It was a transformation. From noise to clarity, from emotion to reason, from gambling to investing. And now it's your turn. Not to chase, but to choose. Not to react, but to rise. Be the smart money, because your future deserves it. And I'll be right here, cheering for you. Always. ABD of Finance.